Hello, this is Coach Mike from WinningStockCoach.com. Going to start out with the market overview for the week ahead, the week beginning February 9th, 2015. Got a couple minor changes. The first one I want to point out is early in the week, we actually dipped below a low point we had that gave us a first topside target, a 2109.11. That lower dip down here kind of moves that potential upside target to 210104. But I want to tell you what we really got going on here, and it's not going to be seen from this weekly chart. We're going to have to look over here at our daily chart. Now, on our daily chart, you can see 1, 2, 3 highs as the closing price of the candles, all at the same level. And you see 1, 2, 3 candles that followed them closing down for the day. The one difference really is this upper wick that was made on this past Friday. We opened up, kind of ran just a little bit above that triple top resistance point, but managed to close the day below it. So leading into the upcoming week, here's what we need to really be looking at. We need to have a focus on this triple top as our resistance point. And you don't go long at resistance, and quite literally we're right there. We're going to use the daily closing cost of $2,063.15 on the SPX, and that's going to be our resistance. What I mean by that is if we can get through Monday and close above it, then we're going to have some room to run. And if we get through Monday and continue downwards, well, then we have this kind of triple bottom area, and we are going to call our support 1994.99. And while we're just kind of trading horizontally, triple top, triple bottom, if we keep in that horizontal channel, our weekly chart will continue to look like this, down a candle, up a candle, down a candle, up a candle. So it's really, really important that we understand that, especially early Monday, we don't need to jump the gun to rush things. People that think trading's about having to get the absolute best possible price for your buy and sell each time are usually people that think, why can't I make any money? If you buy on proper confirmations, and when trade chart patterns and stuff become more highly reliable and give you a greater potential of producing a winning trade, then you're probably not ever going to buy right at the low or sell right at the high, but you'll also have a lot less losers. So right now, we're going sideways. Now, the space between that horizontal consolidation channel is quite great. We can see that when we switch back over to the daily chart there. Pretty good size moves between the lows and highs. So even if we start to pull back, which would leave us only being able to anticipate that triple bottom area, it's still a considerable enough move that we could take shorter term swings, stuff that might only last a week at most, down to that bottom area, see how it holds at the support. If it bounces at that support, well, it's kind of expected. It did it 3 times before. But the real big thing to understand here is for your long-term investments, you don't want to be buying new stuff until we get a change. As long as the indices are going horizontal, most of the stocks will too, and it will not give you a profitable opportunity for longer term investing. Now we're going to move over to the DJI, that's the Dow Jones Industrial Average. This past week, big old green candle. The week before that, a lower close on our weekly candle. That could still have us anticipating a lower high, and it's not got much room to run. You can see as I zoom in on my chart to a potential Fibonacci target here at about $18,073 or so. And that's really right in line with this prior weekly swing high point, which gave you that close at 18,053.71. What I would look at personally is because there's so little room here, let's see if it breaks out here. If we get the breakout above that prior weekly swing high point, then we could quite literally get about another 12 to 1300 points on the Dow. That's a big enough move that it's worth waiting on this small little area right here, because if you fail to break this and if you make a lower high, regardless of how nice this one green candle might look, if you fail to break and you do end up with a lower high, you're going to come down here to about 16,600 or so. And that's not something you want to be holding a long position right here for, because those 30 stocks in the Dow Jones Industrial Average could take quite the hit to move the Dow that way. So again, watch for the breakout to be made, and on the breakout, play the momentum trade. Play the higher volume, the burst that should get you up here. It will probably look much like this October run, in which case you wait for the break. It'd probably be about here, and it'd give you a good month and a half, 2 months to carry it up into this target. Now we're going to look at the RUT, the Russell 2000. That's the small cap index. We've talked about this consolidation pattern for a few weeks now, and the Russell 2000's had a little bit more of the consolidation. Had the spike up Christmas week, came right back down even with it for New Year's week. And this past week was a pretty good week. We actually hit the resistance point on Friday and pulled back from it. That would be the weekly closing price of 1215.21. And, you know, that could be an area that it struggles to get over, could put it right back down in the bottom end of this consolidation point. For me personally, while it's trading here horizontally, again, you know, no desire to touch it for anything long term. Shorter term stuff's a little bit different, but for your shorter term stuff, if it fails to break above this horizontal channel, this consolidation pattern, a pullback from here would be a shorter term short play where you wouldn't anticipate any lower than this low area it just keeps bouncing off of, and you would play it into the horizontal pattern on short term trades. That would go for any small cap stocks, the Russell 2000. There's 2,000 stocks that are contained in this index. Finally, now we're going to move over to the NDX. That's the NASDAQ 100. This is the one we've talked about for the past few weeks that on the weekly chart is actually giving you a series of lower highs and lower lows. You know, because of that, it's even more important to play this as a momentum trade and let it move a little bit. You can take short-term trades because you're just midway in this horizontal channel right now. You could take shorter term trades with the chance to get up a little bit, but I wouldn't set my sights higher than that 4308.76 area, because that would just, you know, kind of be in line with how it's trading. The one thing I do like about the NDX, though, we've talked, it's been about 2-3 months now where we expected it to come back and hold the support of the prior weekly swing high point, which was about 4,100. And it's done that, even though it's basically just stayed there. And 1, 2, 3, 4, 5, 6 different taps on that support point over the past 2.5 months. So all in all here, what you should be seeing is, man, some of this stuff could go either way from here. And sometimes you have to look at the market like that. It could literally go either way from here. Now, you might be able to guess and properly guess which direction it goes and do quite well on your guess. But because, you know, it would just be a guess, let's admit it. I mean, even if I would get a good trade on a longer term up move or a good trade on a longer term short play, it would just be a guess. But if you allow 1 to 2 days this week for the market to shape up to tell you whether it could continue to the high side or could continue to the low side, or for your longer term trades, if it breaks out of this horizontal consolidation, you'll actually no longer be guessing and you will have been waiting for a higher probability opportunity. So just understand, when you're in this horizontal consolidation, you've got to focus on shorter term aspects of trading. The breakout above or below that horizontal channel will indicate your longer term trades, whether they be long trades or short trades. And until you get those, you're playing a guessing game. Guessing games are opportunity for you to maybe get lucky and make some money, or maybe lose some money. You have to determine if it's the time that you feel comfortable with the risk factor, not the reward. Everybody's comfortable with the potential reward, but are you comfortable with the risk of being wrong at a time where the markets could go either way? This is Coach Mike from winningstockcoach.com, wishing you the best of luck in your upcoming week of trading, and God bless.